The following is a presentation of TFNN. Now, the author of Mastering Probability, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the March 6th terrific Thursday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that each of us need in order to lead an inspired life. Because leading an inspired life, folks, that's what it's all about. So let's go look at one of our tools. This is the tool I call, well, let's just start our day by putting ourselves in a peak physical state. You know, yesterday morning, I was on the 10 o'clock show. I gave you the formula for that. So if you didn't catch that show, go listen to the archive on Channel 10 to yesterday's show. It's really all about three elements, your physiology, about 60%. So that means right now, just kind of put your shoulders back and, you know, take in a nice deep breath of air out there. Focus on what it is that you want and make sure that you absolutely use words that are going to complement what it is you want to accomplish. Now, imagine if you woke each day, each morning, and the first thing you did was to put yourself in a state of mind where you said to yourself the following. You said, here's an opportunity for me to celebrate like never before, you know, with my own power and my own ability to get myself to do whatever is necessary. Folks, the reason this is so important is because we will act consistently with our view of who we truly are. Whether that view is accurate or not, that's right. We will act consistently with our view of who we truly are, whether our view is accurate or not. And that's really important because, as you've heard me say, questions are the answer. You see, questions control our focus. Each of us, each of the people that we come in contact with on a daily basis has a primary question. And our primary question begins from the time we wake. So if you woke each day and you said to yourself, here's an opportunity for me to celebrate like never before with my own power and my own ability to get myself to do whatever is necessary, what type of question does that presuppose? A negative or a positive question? Absolutely. It's a positive presupposition. That's the way to actually start. You know, so if you find yourself in a situation where you need to go ahead and influence someone, you know, which, by the way, that influencing of someone, that could be yourself. So wouldn't it be helpful to understand your or their primary question? Something to think about. You know, the truth is the most important skill that you and I must muster and master each day is the skill of influence. And the truth is that each of us must influence someone each and every day. If you're a one-man or one-woman army, when it comes to your business, whether it be trading or something else, you need to learn how to influence yourself. If you're a parent, you need to learn how to influence your children. Each of us, on a continuous and ongoing basis, needs to master the skill of influence. And in order to master this skill, each of us need to master the art of asking a great question, a better question. That's why questions are the answer. If you want a better life, you have to ask a better question, right? Ask and you shall. That's right. Ask and you shall receive. So how do you think that works? If you ask a lousy question, what are you going to get? You're going to get a lousy answer, and none of us want that. So I summarize it like this. It is the meeting of preparation with opportunity that generates the offspring that most folks call luck. Well, each day can be yours and mine. Each day can be our lucky day. So let's make today a lucky day, and let's go check out the lucky day in the marketplace out here. Right now, we've got the Dow futures up 41 points. They're trading out at 16,398. S&P futures up 5. They're trading out at 1877. NASDAQ futures up 5, trading out at 3733. I'm surprised that the futures market is not up substantially more than this. We'll take a look at that here in a moment. That's because of the euro-Japanese yen. Talk about liftoff action. Oh, my goodness. All right, now Russell 2000 up as well. We got King Dollar back 25 cents. It's trading out at 79.87. Goldilocks up a buck, so we got a flat market out there. It is at 13.41. Silver is flat as well, up a penny. It's trading at 21.28 out here. Light sweet crude is struggling here. It's been struggling all day yesterday, struggling a little bit this morning, back about 55 cents, trading out at 100.90 out here. Lights, natural gas back just a bit out here. Let's take a quick peek around the globe. Quick peek around the globe. We see the FTSE's up 20 points over in the UK. The DAX is up 18 points. Green across the board in Asia last night, meaning the Nikkei, the Hang Seng, the Shanghai out there. Leading the charge the upside was the Nikkei. It was up 237 points. Our call-in number, 877-927-6648. Give us a call, folks. Would love to hear from you. Take your question, answer anything I possibly can to assist you in your trading, investing, a trade you've got, something you're looking to get into, whatever it might be. And we've got to start our day with the Euro-Japanese yen. You know, we've been talking about this currency pair, and the importance of this currency pair is just simply the correlation to the U.S. stock market out here. They've been showing this pattern, saying, you know, this looks more bullish than it does bearish, number one, and they completed a bullish Gartley buy pattern. It did that quite a while ago. That was on February 4th, I believe. Yeah, February 4th was when it made its low out here. You can see that the Euro-Japanese yen looks like in this case here, you know, a day ahead of where our market's made their low out here. So you got February 4th. Now what the Euro-Japanese yen has done is taken out the B point. Of course, a lot of time left in the trading session, so anything can happen, and probably anything will happen out here. But let's just take the information that we've got now. That's all that we can really make our decisions and our trades based off of. Unless you've got a crystal ball, and if you do, please give me a call. But give me a call on my personal hotline out there, because I want somebody with a crystal ball. As we're going to use the patterns, though. We're going to use the patterns as our crystal ball out here. So you've got an A to B equals CD to the upside that is being formed right now. That A point being the low of February 4th, your B point being the swing point here that was taken out this morning. That was our February 21st high, 141.25. And the retracement down to February 27th, down at about 138.78. The 1-to-1 A to B equals CD, and you can see that if you're watching us on TigerTV, and I hope that you are, even if you're just listening on your mobile device, you can watch us on TigerTV by going to the homepage of TFNN.com. Upper right-hand side, you'll see a button, 3 little smartphone devices on that. Click on that. The show will stream live to it. You would have seen the Gartley, the .786 Gartley sell pattern that I have out here as a projection, just a projection. This was drawn ahead of time, just as a projection out here as a potential reversal area for the Euro-Japanese yen. Of course, potential because it just depends on how that area is hit, what kind of bar is coming into the 143.82. You'll also see that that was your 1-to-1 A to B equals CD to the upside here. Big move here this morning. That big move here this morning says, hey, it might not be that .786 Gartley sell pattern. I'll go ahead and color it in on my screen out here. Sometimes the colored version looks a little bit better for you. We'll go ahead and we'll make that a nice bright yellow. There you go. Nice bright yellow out here. So that's the Gartley sell pattern, the projected Gartley sell pattern. Remember, you plan, you know, what did I say in the opening about the opportunity? What did I say in the opening about you know, how what most people call luck? It's just really the meeting of what? Preparation, right, with opportunity. Well, that's really this pattern here. It's drawn ahead of time. You know, it's a meeting of preparation. Preparation is just simply drawing the pattern ahead of time, waiting for it, being patient, waiting. See if that pattern comes to fruition. And then that might provide us with the opportunity. Some people would call it lucky out there. I say no. It's the harder you work, the luckier you get, isn't it? Now, the key here is we've got a nice wide-ranging bar as we speak here right now. Quite a ways away from that, of course. If it hits 143.73 at this stage like that, today, as we speak, and that's certainly a possibility, you can forget this .786 Gartley sell pattern. In fact, it potentially could be saying an A to B equals C to the upside. Now, the first thing that the Euro-Japanese yen would have to do would be to clear the December 27th swing point out there, and that's at a price level of 145.67. We'll take things one thing at a time. Now, that's why I said I'm surprised that our futures market is not higher than it actually is. The Dow being up 38 points, the S&P only being up 5 points. That does have to make you say something is going to get in swing here. You know, is the getting in swing, is it going to be the market's going to take off today, or is it getting in swing that, hey, Maybe something else. Well, let's go take a look at a shorter-term time frame out here. I wrote in the newsletter this morning that I thought that we'd see the Euro-Japanese yen run into resistance, and pretty quickly this morning. Well, guess what? It did it. It did a little bit quicker than I thought. I didn't think it would do it by 9 o'clock this morning, but everything was pointing to this currency moving higher. Now, this is a 120-minute chart. You can go back to other archives of shows. You'll see that I haven't changed any of the lines on here. And what is it that the Euro-Japanese yen actually did here this morning? As we came into this 9 o'clock session, it hit the top of this rising price channel out there. Now, that doesn't mean that that's going to stop things in its tracks out here, but we are in what? We are in a 120-minute chart. We're in the extreme overbought condition for this currency pair. So it would not surprise me to see this area truly act as resistance and either see a move sideways or an actual pullback out here. Now, just a normal pullback inside this currency pair out here. We go from the swing point low, and on the 120-minute chart, that's 5 o'clock in the evening on September the 3rd. How about on March the 3rd out here? A dead cat bounce takes us right back, in essence, to where this thing broke out at 8:30 this morning out here. We'll take a look at this. Means we got to go take a look at the other currency pairs and see what we have going on out here. Now, it's a rising price channel. Does price have to stop up there? No, but with it being so overbought here on the 120-minute chart, pretty good chance we're going to see this either pull back or move sideways here soon. So the question is, if this thing really does begin to pull back, and the futures are only up 40 points right now, what does that say? And I don't know the answer. If I did, I would actually go ahead and tell you that. I'm just surprised that the futures aren't up higher right now. Now, what's really important about this currency pair is the following. Let me go find that tab, and that's really the correlation chart out here, because I believe that correlation is now totally back in sync. Well, it should be. It better be. Otherwise, here is the Euro-Japanese yen. So as we take a look at this, we saw that one-hit wonder, that one-day wonder, where that was a result of what took place over the weekend over in the Ukraine here. But now what we're seeing, and we'll come back. We come back from break here. We'll go back and take a look at this chart here, and that's the correlation of the Euro-Japanese yen and the S&P futures. 877-927-6648. Be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're new to TFNN, then you've probably heard some of our hosts and traders talk about the exciting charting program, The Art of Timing the Trade Charts. Tuesday, March 11th at 6:30 p.m., Dave White and Tom O'Brien will be hosting a live study session for anyone with a subscription to this exciting charting program. During this hour-long online workshop, Dave and Tom will lead a brief presentation along with taking questions from those that attend. Right now, we have a great deal for all new subscribers. You can sign up for the Art of Timing the Trade Charts and get your first entire month for only $1 while gaining access to this live event with Tom O'Brien and Dave White. For more information on how this exciting charting program works, you can click on the Charts button on the front page of TFNN.com today and check out some of the videos that walk you through a variety of the features included. Sign up now by taking advantage of this exciting offer for just $1 before it's too late. Visit TFNN.com today.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzavento, Andy Hecht, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, Dow futures, I should say, up about 40 points right now. So no big change in the futures marketplace. And before we went to break, we were taking a look at, we were gonna take a look at the Euro Japanese Yen ES Mini chart out here. That's what I've got up on my screen. If you're just listening, I'll describe to you what it is we're looking at. Now, the first and most important thing is that currencies rule the world out here, right? You got stocks that are just all priced in currencies, and the best that I can communicate to you is the carry trade, the so-called carry trade. It really doesn't really. Look, here's the deal. The Euro-Japanese yen is the currency pair at this stage here that tracks the U.S. stock markets. Now, it may track other things as well, but I can tell you that it tracks the S&P 500. In this case here, we're showing the futures contract better than any other currency pair out there. So you can take that U.S. dollar correlation, and if that works for you, great, keep using it. But I will tell you that the Euro-U.S. dollar, you don't have to trade the currency pair, although it's a great currency pair to trade, that this tracks the U.S. stock market better than anything else. When you see correlations, the correlations tell you that there's trouble in River City. Now, when those correlations go away, that's what you want to be able to see, whether you're bullish or bearish. You want to see, momentum continue up. And as we take a look at the top portion of my screen here happens to be the S&P 500. And if you come back to the time frame, there's a couple different spots where you can take a look at this, where things just began to get uncorrelated, if you will, meaning the S&P was going north and the Euro-Japanese yen was going sideways to south. And that's really coming all the way back into the time period here of January, looks like about January 28th. When there was a high, when there was a peak, that was made inside of both the S&P as well as inside of the Euro-Japanese yen. And then we saw a retracement. We saw a move down, so that was normal. But what we saw take place is right around the time period of the February 10th or so, we saw the S&P continue to move higher. And we were seeing higher highs if compared to that session on January 28th. But we were not seeing that in the bottom portion of the chart here with regard to the Euro-Japanese yen. In fact, the best that we got in the Euro-Japanese yen was a sideways move, and that was telling us you can't use this as a timing tool. I wish you could. I have not figured out how to use this as a timing tool per se. You go take a look at the Euro-Japanese yen, and if you see a pattern, a sell pattern set up ahead of time that works, that has worked in the past for me, but doesn't always work. I will tell you that. In any event, this was forecasting ahead of time that we were going to see some type of decline, and when we saw boots on the ground over the weekend, last Friday evening or what have you, in Crimea, with regard to Crimea River. I don't know why I said that, but in any event here, We saw that one day wonder out here where we saw the market move lower. Now, you can't really consider that to be much of a military skirmish because it only lasted for one day and these markets continued to move higher. Well, look, with regard to the move inside the Euro-Japanese yen as we're speaking here right now, other than the mere fact that it hasn't taken out its highs out there, meaning the highs back here in around December 31st, December 27th, I think was when the actual high came in. That correlation is really back in play. I'd really have to be stretching things to come all the way back to the December time frame. So this bodes well for the bulls and does not bode well for the bears out here with regard to taking a look at that currency pair, with the exception of that intraday. Knowing that that correlation exists and knowing that the Euro-Japanese yen on that 120-minute chart has hit an area that really has held as resistance on its climb higher out here. So we do have that as a possible setup. But I can tell you on the longer-term basis, if we go back to, I'll go back to the Euro-Japanese yen, so long as it stays above this swing point that it is taken out here this morning, and that is February 21st out here, that bodes pretty well. Now, that sell pattern here, this 0.786 sell pattern, that's perhaps where we might see where we've got now the market's kind of in lockstep, right? They're doing the tango together. And here at that 0.786 Gartley sell area, if in fact the Euro-Japanese yen cools off here, which it should, as we took a look at that overbought situation, and then it makes that with some smaller bodied candles and we get a reversal, that's where you can start to see some type of a retracement. Correction, look, you got to just call things as you see them at this stage. And this stage here, I would say just some kind of retracement to set up the next buying opportunity. So don't mean to spend a whole lot of time here, but, the patterns are the patterns. It doesn't really matter what chart it is we're looking at, and this is a real important one for us to be paying attention to. So we're going to spend more time on the currency markets. That means we're going to go take a look at the Euro-U.S. dollar. We're going to take a look at the U.S. dollar, Japanese yen. And, hey, I got some emails from some folks, and they said, hey, how come you're leaving me out? And that was with regard to Canadian currency and Aussie dollars and things of that sort. So all you have to do is give me a call at 877-927-6648, and we can take a look at your specific stock chart. Goldilocks up $5. We're going to take a look at an interesting pattern, a potential 3-drive to a top pattern that could be setting up in that shiny metal. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow up 41 points, trading out at 16,401. S&P up 5, trading at 1879. Composite up 12 points at 43.70. Russell 2000 up about 2.5 points, trading out at 12.08. Apple up $1.45. Microsoft flat. Google up $6 and change. Google leading the charge. The upside just behind them, you've got San Gammo Bioscience, SGMO, up a nice 15% here this morning, up $3 and change. I don't see what it is. It is on that, but what's leading that? BJ's Restaurant, BJRI, is the ticker symbol. They're up $3 out here, and I don't see any news event behind that. That's up 12%. We'll take a look at that. Axial Corp up 8%. AXLL, that's up $3.50. YY Inc. is up $3. Tech Mira Pharmaceuticals up 10% out here. Joy Global, haven't seen that name for a while. Used to be ticker symbol JOYG. They got rid of the G. They are now JOY. Nothing but joy there. It's up 4% here this morning. Pixelworks, PXLW, up 35%, up $1.66. I think I had a client send me an email on Pixelworks yesterday out there. And I have to go back and look at the email. I did some work on well, I'll know if I pull up the actual stock chart out there. We went back and took a look at whatever stock it was. We went back and took a look at the, no, it can't be Pixelworks because when I click on the name here, it doesn't show me any earnings or anything. And I know that there was a 10K that was reversed. Anyways, I'm babbling here. I don't like to babble. Tiffany & Company's up $1.57. To the downside here, leading the charge off about 10% this morning, off $5 and change, is Children's Place Retail Stores, PLCE. Looks like they were out with numbers here. They generated, I wish I could tell you what they generated here. Looks like about net sales of $467 million versus $509. So they met that. They did not beat the last quarter's numbers, and net income down as well. Stock is trading down about 10%. Costco, they were out with numbers. COST is the ticker symbol. Got to love that store. Trading off about $3 and change. They had their net income was off in the second quarter, down from 547 million shares. They were for 547 million in profits. They generated 463 million out there. Their net sales looks like it did increase slightly for the second quarter. So they did beat the top line, but not on the bottom line. Pandora Media, ticker symbol P, is trading off $1.79, down about 4%. WUXI, WX is the ticker symbol. It's a pharmaceutical. I believe company off about 6%, down $2. Sun Communities, SUI, down 4%. Repligen Corp, RGEN, that's off 11% here this morning. Again, our call number is 877-927-6648. Had a question in our Tigers den out here, and the question was this, with regard to the IWM. Well, there were a couple of questions. First was, why was there such high volume, such wide price spread, accelerated moves inside the IWM? And that was on Tuesday. That was on March the 4th out there. And there wasn't the same corresponding move inside of the other ETFs out here. Certainly nothing from my standpoint volume-wise, and I don't know the answer to that. I just know that there was. Let's just take a look at the stock chart. There was nothing that I could see inside any kind of news. There was nothing out there. What we can say is that what Tuesday's move was a move with accelerated volume, wide price spread, above a B point, gapping above a B point, and confirming an A to B equals C to up. I mean, it does not get any simpler than that. Does that mean the pattern has to complete? No, of course not. Anything can happen in the stock market. We all know that to be the case. That's why you trade with both sides of the an exit plan, both for your exit on the target side as well as on the bottom side with it moving down. So this has a 1-to-1 A to B equals C D, a confirmation to the 121.63-ish area, but I would say it doesn't look like to me that that's where the IWM wants to stop. Now, the second question was, hey, what happens if today, because we had such a high volume bar that day, which was 112 million shares, what happens if today you get a move above 120.58 and a close back below it on lighter volume? Is that a place to short the stock? And, boy, I'd have to say no. No, all that would mean, it just simply, to me, is it a failure? It's not, like I said, it's all-time high, so, yeah, it's a swing point out there. But, no, you would need much more than, in my opinion, you need much more than that in order to be a failure to go short. You got to take a look at the pattern, the real pattern that had completed. Now, if remember, when we take a look at this is my opinion only. Of course, I've gone out and proved it, so that's another thing. Is that my opinion, which I've proved, by the way, is that you can break a lot of these indicators into four primary areas. You break them down into, you've got indicators that deal with velocity, speed, momentum, things like the RSI. That's why I use the relative strength index. You can use the stochastic, same thing, 85% correlation. Either one is going to accomplish that. You can use things such as verticality, energy angle. What I consider to be one of the best tools out there is the power law vector indicator. You've got volume, volume at swing points, volume on moves crossing B points, things of that sort. If you take a look at David White's software, which you should, you can, there's going to be a workshop on that. Al, post that for me on my screen. Tell me when that workshop is if you could. And you should go over to the homepage at TFNN.com. You should check out that software. I mean, that's one of those shoulds. That's one of those musts. Change it from a should to a must. Just simply go do that. Now, in the case of David's software out there, and Tom's software, what you're looking at is one of the things that he posts on the charts is he's got the volume at swing points, so there's where he's taking a look at volume, and he's using the other element, which is taking a look at the verticality. He's taking a look at that power law vector indicator, which gives you the power, the energy behind that angle. So that's a secondary thing. So there's three of them, and then you've got the volatility, and so you've got to take a look at all of those elements out there when you are trading anything. So volume is only one piece of it. And just simply moving above, if it does that today and closes back below, to me, that's not a shorting opportunity. In any event, let's go to Audrey in Sacramento, California. Audrey, thanks for calling. Thanks for holding. How are you this morning?
Good. Thank you for taking my call.
My pleasure. Thanks for listening. Thanks for calling. You wanted to look at, is it the gold contract you want to look at?
Yeah. You mentioned before the break that you see a potential 3 drops to a top pattern for it, and I wanted to ask if instead, to explain how you see that. I'm not too familiar with that, but why you wouldn't see possibly it going up to, say, 1,400, 1,420, and then back down, consolidating into the June-July area to come back up again.
Absolutely. So are you watching us on Tiger TV by any chance?
I'm not watching. I'm listening.
Nope. Perfect. Okay. All right. So a couple of days ago, I noticed a pattern inside of gold here, and if it were to complete today would be the day. Could have been yesterday, but today could be the day, and that would be where we would see gold actually trade up about another $20 or so. So that's an easy thing, and that would be a third drive would occur if we were to see the price of gold get up to $1,360-ish today. Now, how I come up? I'm sorry.
No, I just said,
okay. Okay, good. Okay. So, and what I'm doing is I'm starting with the first swing point high that we had in gold here on February 18th. This is during this run up here. And gold traded there at a high of 1332.40, pulls down for a couple of days. The second move up in time, the second drive up, took us to a high on February 26th out at 1345.60. Makes a move down for a couple of days. The A to B equals CD would complete around 1361, and that's and with regard to time. So it was just really with regard to a cycle in time, and the actual completion of that pattern is today. It took it took 6 days, 6 trading sessions, is what I should say, from February 18th until we got to February 26th, and today would mark the 6th trading session as well. So if we see a move up to 1361. And then that would then mark the third drive out there. And then if we were to see a reversal candle, that would have to take place tomorrow. Then that would tell us, okay, we have a short-term top that would be, we may have a short-term top that would be in place here. If this pattern doesn't set up today, then what I see out here from a timing standpoint just kind of goes away. Because if that were to occur, a couple days from now, then that probably is not a 3 drive to a top pattern, and it's a very short term. It's just a pattern that is out there. So does that now you also the presupposition? Go ahead.
Well, the time frame that makes it work, it has to work by today or tomorrow. In other words, what is that time frame exactly? Go ahead.
Yeah, the exact time frame is today. So what you don't want to do. This is one of these patterns here where you're looking for time. So you don't want to try to force a pattern, and you're looking for price, but you're really looking for Fibonacci expansions, and that would create the 1.618 expansion between the last set of swing points, the one from February 26th to today. So again, these are patterns where I draw these ahead of time, just like I've done on all the charts out here, and then if they get hit, then the question is, okay, what does it do from there? Now, the other beauty of that pattern, let's say it were to work out today. I have no idea, Audrey, if it will. Let's say it worked out and we see this price move up there and we see a reversal. Once you see that pattern get taken out to the upside, it tells you it's a super strong bullish move that's going on, because those are very bearish patterns out there in the past. And that's really what we have going on inside the Russell 2000, the IWM. It's made a 3-drive, just made 2 3-drive to a top patterns, and it's taken them out. And maybe that's the answer to the original question I was posting in the den. Why did the IWM move so high versus the others? Because it had taken out 2 of the most bearish patterns out there without any problem. So that's just a good fodder. I don't really know that it worked like that. But you were also suggesting, you're also saying, hey, why wouldn't it go up to $1,400 or so?
Yeah, and then maybe correct a little into the seasonal time. Everyone's expecting June, July rally or something like that. I'm also seeing strength and weakness. Momentum sometimes wanes, but the strength that I'm seeing in gold is that in the last maybe week or so, it suddenly was supporting on closes at the 9-period EMA. I'm sorry, I think it was 200-period EMA, yeah.
Absolutely.
The exponential moving average. And even though I think one day it shot down, it went right back up again, 8 or 9 points, and closed right there. That was the day it closed at 28. And it's been holding that on closes, which shows strength. But then I see sometimes the momentum waning at the same time, so I'm not sure what's going on.
No, well, look, you are absolutely 100% correct, and because of that, you get to be you get to do the show for the rest of the day today. So because you are so well informed on gold, so that is absolutely excellent way to take a look at it, and yes, from a relative strength standpoint, it's sort of making some new highs with lighter strength. But are you long the metal? Are you looking?
I'm not right now.
Okay.
I'm not.
Okay, so look at the gold and the gold equities. They're great. This is a great trading opportunity. Here, I'll show you another chart. You can go ahead and put this one on your screen as well. And because you are so nice to call and you're so well informed. So here's a chart that I'm showing. So you can go catch the archive on Channel 9, sometime later today. And what I have on my my screen here right now is the top of the chart is the GDX. So it's the Gold Miner Vectors ETF out there. And the bottom of the chart is the actual gold contract. And you can see nice rising price channel in both. The ideal trade for us to get in, don't know that this will happen, but boy, it sure would be nice, would actually be to see both of these pull back to the bottom of their channel line out there. And that's what I'm looking for as a potential pattern. I've been in and out of gold and silver and the mining equities twice off of the bottom here, both times for great gains. And would like to see this setup take place next. Now, I would go ahead and I will use gold as the actual indicator to go ahead and get in, because the mining equities will follow what gold is doing. So there's a pretty nice rising price channel out there, and if we can see gold pull back to the lows out there, which I can't tell you what that price is. But if you can draw the trend line, the channel lines in there. And that would be nice. So
I'm long some of the unknown gold stocks. I mean, not the hot stocks, but so they're doing okay. But I'm also concerned about silver, which is acting badly, but yet it is kind of basing. So in that sense, it's good. It's not going down too much. I don't know. What do you think about silver?
No, look, I think you're.
I would have thought by now silver would have had to go up a little more if gold is really going to make a move right now.
Yeah, you know what I think? I think that when you take a look at silver, first it broke this consolidation. It did what it was supposed to do. It ran into resistance of a longer term channel line out there, and it's pulled back. But the pullback, if you go from the recent low of January 30th, Audrey, which was at $18.97, up to the high that was put in. Heck, I don't even have the right high. Let me do that here for you. What I'm going to say is it has not even made the 0.382 retracement. To me, okay, so, I mean, we can say it hit it, okay, $20.95, and we made this little doji candle on February 27th that got to $20.98. To me, silver still looks strong, too.
Yeah, okay.
All righty?
Thank you so much,
Hey, thanks so much. You bet. Thanks so much for sharing with all of us tigers and tigresses out there. That was Audrey in Sacramento. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. Dow up 75 points right now. S&P is up 7. So we are seeing the markets respond the way that they really should have out here with regard to the Euro-Japanese yen, just leading the way, moving up higher. That's why, and I said, we came on the air and, hey, futures were just not as up as much as they should have been. It's just a great example of how that currency pair works and why you want to go ahead and put that in your arsenal out here. Now, again, the number here on gold in order to go ahead and form that 3 drive to a top pattern somewhere around the 1360-ish level. Now, that doesn't mean if you see it's another $15 higher. 45, yeah, $15 higher or so out there. That does not mean if you see gold get to 1360 to go short gold. Do not do that. These metals are strong out here. What you're looking for, if you're not in, is you're looking for places to enter, or if you are in, you're looking at places to add to a position. Do not go short the metals. Even silver, as Audrey was referring to, as we took a look at that, really it's pretty strong because it's only been able to make a 0.382 retracement out there. So that's on Goldilocks and silver. Let's go take a look at the daily futures contracts out here just to kind of round out the show. And during the next hour, we'll take a look at the ETFs, the other currency pairs, and things of that sort. So as we look at the ES Mini out here, the ES Mini has got every sign and indication that it wants to move up to about the 1960 area. And we're trading at 1880 right now. Yes, 1960 is what Steve-O says. Now, it's over the course of time out here. We're not going to see that move today. I don't think we're going to see that move today. Be one heck of a move, wouldn't it? But it has broken. What the ES Mini's done, it's broken a consolidation. Now got the Euro-Japanese yen tagging along. And the bump in the road that we've got to watch for inside that Euro-Japanese yen is as it completes that 0.786 Gartley pattern. That is as price gets up to that level. And then we'll take a look at what kind of candle formation is out there. But nice big break in the markets. Of course, New York Stock Exchange, a quick peek over there. New York Stock Exchange is saying, hey, 6,000 points higher, which is going to be a trip. But that is what it is saying over the course of time out here. It's just the patterns. It's just the patterns, ma'am. Just like Joe, what was his name? Joe Gannon, from Dragnet would say out here. We've got 10,387.17. About the best thing that took place was last week for the New York Stock Exchange was this. The New York Stock Exchange closed above 10,387.17. That was your 2007 highs out there. And then this week we saw on a monthly basis, because last week, February 28th, you saw a close above that. And this week here, we've seen a test of that area. So long as March closes above that level, you now have your test of a consolidation inside of the New York Stock Exchange. Of course, the NASDAQ Composite, also something to be watching this week out here, this month for sure, because the NASDAQ Composite is now into its 2,000 highs. It's now into the swing point from the 2,000 level out here. Give me a moment to go find that. I don't know if I can do that quickly here. Yeah, real quick. I've got time. So that level is 43.55.69. That's what you want to be paying attention to. Right now you're at 43.69.80. So on a monthly chart, you're inside there. Stevie here has got these little cycle dates, much like when we were taking a look at the 3 drive to a top pattern. You can draw these cycles ahead of time. And the NASDAQ Composite tends to make a cycle pattern about every, every 11 months out here, and it either makes a cycle swing point low or a cycle swing point high out here, and it's been doing it, quite frankly, since 2000. And so that next cycle, either high or low, and it looks to me like it's going to be a high out here, is in April of 2014. We'll see if that holds. Right now, the key is, not so much the cycle pattern, just a mere fact you're back now into the 2000 highs. Time flies, folks. The Dow up 81 points. Thanks so much for joining me. If you're off to start your Thursday, have a terrific day out there. Remember, begin it by asking yourself an empowering question. Take care, folks. See you tomorrow morning or in a few.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.